telephone, advertising and website hosting, legal and accounting. Your recurring costs may be office furniture and equipment, or we call it FF&Es, furniture, fixtures, and equipment, building improvements, remodeling, lease, rent deposits, starting inventory, license permits, franchise fees, legal and professional fees, utilities and internet, and your supplies. These are the basic startup costs of what it would take to stand up a business. Now, determining your startup costs goes into a funnel. When you look at all of the different colorizations, your total startup cost goes into the funnel so that therefore you can know exactly where you're at with what each cost are. Certain costs can be a little bit more expensive, such as Mr. Green, in general contractor. He may have some licensure requirements, he may have some bonding requirements, as well as the fact that he has to have marketing money set aside so that he can pursue his contracts. All of these type of costs are costs that need to be managed. And as a small business, it's very important that when I talked before about your support network, whether you're doing it through QuickBooks, whether you're doing it through a bookkeeper or an accountant, you need to sit down on a monthly basis and talk to the professionals that are in your support network to make sure you're running your business. And that can be quite difficult sometimes because as a small business, when you're first getting started, we sort of joke a little bit about it, but your hair is on fire every day. Every day you're buried in the noise trying to run your business. So you don't really feel like it's necessary for you to spend time with these professionals in order to have your arms completely wrapped around your costs. But I submit to you that if you don't do that, you're the walking dead. You'll be out of business within 6 to 8 months. You need to make sure you keep an eye on all of that. Because at the end of the day, just because the cash register is ringing, just because money's going into the bank account does not mean that you are a successful business. There is a major difference between revenue and profitability. Revenue is money. Profitability is margin and sustainability. And there's a major difference, and you need to look at it as such. And that's exactly why you need to manage everything from your startup costs to all of your ongoing costs. Meet your legal requirements. Your business must be organized as some form of entity. The most common entities are sole proprietorships, general or limited liability partnerships, corporations, whether it's an S Corp or C Corp or a limited liability company. There are advantages and disadvantages to each form of organization, so you should consult a lawyer or legal counsel to learn what is best for your situation. And it's not necessarily, hey, I want to be an LLC because that protects me. It's really more than anything else, ladies and gentlemen, about the tax liabilities as it relates to your business structure. Your business structure, in most cases, once you get above $450,000 in annual revenue, all of the benefits of being an LLC basically go away. At that point, you're either having to look at full incorporation as a C Corp or as an S Corp. Or if you want to look at a partnership, if indeed you're doing a lot of joint ventures. So it's not so much you looking to protect yourself, although that is important. There are benefits, but it's more related or specific to your tax structure than anything else. Again, meeting your legal requirements, whether that be state and local registration, reserve or file your trade name, form or register an entity, file your articles of organization or your articles of incorporation, register for your sales tax licensure, set up state wage withholding, establish unemployment insurance accounts, and apply for your permits. And lastly, and most importantly, secure your federal employer ID number. That is complete the SS4, and you have the number there, the 800 number, where you can do it through the IRS. As many of you know who've sat down with me to do it, it only takes 5 to 10 minutes to do that online as far as getting your taxpayer ID number. The articles of incorporation at the state of North Carolina Secretary of State's office can be anywhere from as little as $125 to as much as $500, depending upon which structure you choose as far as how you file your original articles of incorporation and what you do to get started. Again, meeting your legal requirements, the IRS offers easy to understand IRS relevant training videos, and they are training tools that go from everything from the Affordable Care Act, Bank Secrecy Act, business expenses, business income, and so on. You see the full list there. The IRS is more concerned than anything else about not necessarily you paying your taxes on time, but how it impacts your staff, your employees, or other individuals that may be working for you. So whether or not you set your business up as an LLC and the majority of your employees are 1099 contracted individuals, it's important to the IRS that you get yourself structured correctly and that you follow the necessary regulatory requirements in order that you can be a sustainable business. The last thing that you want is for things to be in your mind going extremely well, and the next thing you know, the guy with the gold badge knocks on the door, tells everybody to step away from the computers. Let's lock the door. We need to sit down and talk to you for a moment. Not a good day that day. So make sure that you follow the necessary regulatory requirements and deal with the IRS in a favorable way and consult the competent legal counsel that you need in order to position yourself to be a successful business. Prepare yourself financially. Cash flow may be tight during the early stages of your business. Therefore, limit new debt or monthly payments. Save money. Get your personal finances in order. Live on less. Track your expenses and budget by the month. Take into account your personal budget and calculate how much you need to survive at least the first 6 months of your business. If you start your business with less than 6 months capital reserves or runtime, it's going to be difficult. And what's going to happen is you're going to do what most people do. And we call it fixes that fail. And when we talk about fixes that fail, here's what we mean. You're running your business. The business is going okay for the first 3 to 4 months. The business gets in trouble. You reach into your wallet, you pull out your credit card, you do a cash advance for $20,000 on the business, right? So now things are back on track. You're stable for another 30 to 60 days. You think things are going well. However, because you're not managing your finances and you haven't budgeted properly and you're not doing the things necessary for effective efficiencies each and every day in your business, 90 days later, you're going to hit that same brick wall. That fix has now failed. So what do? It worked the last time. Let me tap my credit card for an additional $30,000. So now you're getting further in debt. And at the end of the day, what you're not really paying attention to, interest rates on that debt is getting higher. Your payments are getting higher. And at the end of the day, the cash that you thought that you was putting into your business is now going back to pay down debt that you really should not have taken on in the first place because you were not fully capitalized when you started your business. So it's an imperative that you start out saving money, get your personal finances in order, learn to live on less. There's a great book that I read many, many years ago by George S. Clason, C-L-A-S-O-N. It's called The Richest Man in Babylon. And what it teaches in The Richest Man in Babylon is learn to live on 70% of what you make. And 30% of that should go to some other places. Whether you're a faith-based person and you think that you feel that should be tithes or whatever the case may be. But if you take an additional 10% and you drop that down to 60%, and you leave that additional 10% and you put it back into your business each and every month, you will set yourself up to succeed and you will not set yourself up to fail. Business plan. This is a document that describes your new business, how your new business is going to achieve its goals. Free counseling is available to help you write your plan. If you intend to apply for a loan to start your business, a lender will require a written business plan. But loan or no loan, you should have some form of a business plan. When I sit down and counsel with folks that are talking about starting a business, I take the approach as if I'm a train conductor. The first thing I ask is if you got on board a train and the conductor's walking through and he asks you for your ticket, he's going to say, who are you? Why are you here? And where are you going? Okay? And that's basically what your business plan should speak to. Who you are, why you want to start the business, and where are you going with that business. And that is a roadmap that you should have very well thought out and planned. Because you probably heard it from some financial services people that if you fail to plan, you certainly plan on failing. So you must have a business plan. The bankers may talk to you a little bit as well because you may walk in with a business plan that you think is a very well-crafted business plan. There are 2 to 3 types of business plans that a business should have. Number one is for internal purposes. It tells you what you're strategically going to do in order to create success for yourself, how your business plan on executing in that industry and in that market segment. The second type of business plan is for a banker. It is specifically to help them understand not only what your core competencies and skill sets are as to whether or not they want to loan you money, they want to see a financial forecast. How are you going to run that business? How's that business going to sustain itself? That's what they want to see. Now, you step outside of that. Let's say you've been in business for 3 to 4 years. There's still yet a third business plan that you must have if you come and see someone like myself, a private equity firm, or a venture capitalist. They want to see a completely different business plan. They have no problem taking on additional risk, but they want to see that you're able to leverage whatever money they invest in you to give them a 3, a 5, or a 10 times return on that investment. They're looking for exponential growth companies. So you need to understand that there are 3 basic business plans that you would need to have. Initially, as a startup, you want number 1, which is an internal strategy map for where you want to go and how you want to get there. And number 2, when you decide to go see a banker, to help them understand where you're at. Number 7, develop your business description of the product or service, your target market, your marketing strategy, the financial information, business operations, and the key personnel. Include a bio and a very detailed understanding for the banker to understand that the management and the leadership of this company has the core competencies and the skill sets to realize that business plan. That's the key that they're going to look at. They know how to interpret and navigate the numbers. That's what they do every day. What they really want to see is that you're capable. If you're not capable or you create any doubt in their mind, it's not a good bet. SBA District Office, they have business advisors, small business development centers, women's business centers, SCORE mentors, veteran business opportunity centers, accountants and bookkeepers, lawyers, bankers and lenders, city count, state and economic development resources. And certainly the Center for Entrepreneurship and Innovation right here on North Carolina A&T's campus, and there's a plethora of resources available here as well. So regardless of what you're looking to do, get the help that you need in order to provide yourself to be successful. You are now ready. We have completed the basics, and now you are armed with the information on how to get ready to start your own small business. The next module we'll have with Mr. Jeff Nager. He is a renowned individual. He's with SunTrust Bank as an executive. He also sits on the board of the National Association of Government Guaranteed Lenders. And I've asked him as a special favor to me to sort of share with you guys at the end of his presentation sort of a state of the state address on what's taking place in the SBA, what's taking place with a lot of the National Association Guaranteed Lenders. You know what? I'm ahead of myself, aren't I? I'm sorry, Mr. Vasily. Excuse me. We're going to have the Bank of Oak Ridge come up next as one of our key sponsors in order to share with you information about the Bank of Oak Ridge and its value proposition here in our community. We're certainly honored and pleased to have them as one of the corporate sponsors for the event. And Mr. Vasily is going to share with you some information about the Bank of Oak Ridge, and then we'll have Mr. Jeff Nager. Thank you, Mr. Vasily. Would you give him a welcome, please?